doorstep, the Eden's Village retail precinct. It's got a range of living options, and you can look at land, house and land packages or established homes. They are pretty new. There's new woolworths there, and the high rental yield that you're expecting there is, it starts with 450, depends on the size of your block, and goes up to 550, and now I'm even seeing around 560, 570. Again, depends on the size of the block, how new it is. They are brand new homes, so you can claim depreciation, and it is a newer suburb in the upmarket area of Redman Plains. So definitely one to have on your list if you're looking at buying and having an investment property. So that's the first one. Second one is White Rock Estate. White Rock Estate is only now recently come on the maps. It wasn't even in realestate.com until a few weeks ago. It's moments away from Springfield Lakes, from Ripley, South Ripley, and Ipswich. It's 10 minutes away from the main shopping center. It's perfectly positioned between Orion and the Ripley Town Center, so it doesn't matter which side you want to go, south or north, you're fine. It's got the convenience. Again, high rental yields here because all houses are brand new. It is a brand new estate. You're looking at 500 to 600 per week. Blocks start from as little as 410, but go up to 580 square meter. Brand new homes, obviously, so full-on depreciation came. It is a new suburb, it is a new estate. You will find that people who are wanting to buy Springfield Lakes but not able to afford it are coming to White Rock because it's new. Next one, Spring Mountain. Spring Mountain is one of the topmost suburbs to invest in. Why, you'd say? Because shops, railway lines, schools, sporting hubs, Brisbane Lions Stadium, everything's there. You just name it. Everyone wants a piece of land over there. High rental yield in the area. The rents there starts from around 550, goes up to 850. We've got houses there that are in the 900 bracket as well, 900 plus. So it's crazy rents. Blocks start from around 300, go up to higher than 580. And brand new homes, same thing, you can claim depreciations. It is a newer part of the Springfield Lakes area. There is Springfield Lakes, Springfield Central, but Spring Mountain and Springfield Rise is the newer portion. And yeah, close to everything. You have got even Brisbane City views from Spring Mountain. Just depends on where you buy your block of land. So moving on. Fourth one, Deception Bay, Morayfield, Redcliffe, Peninsula areas. It is now slowly gaining popularity. These suburbs have a mix of older homes and brand new homes. There are dual-off homes as well over there. High rental yield growth in these areas, starting from 550 and going as high as 700 for bigger homes. Blocks start from 300, going as high as 600. And everyone wants to have a piece of land nowadays in Redcliffe area, we find, because of it being close to the water, multiple train lines, so you've got the options for going to the city. So it's one of those places where we're seeing this high rental demand as well. We've got Ripley and South Ripley, which is considered one of the cousins of Springfield Lakes. Ripley doesn't have a train line yet, but the extension is coming forth there. So you will find it is next postcode is already the route. So the blocks are starting from 350 up to 550. High rental yields from 480 to 650 per week. Newer homes, you've got Stockland, Providence on South Ripley side, and Ripley side you've got Eco Ripley, you've got all those Harvest. There's so many developers coming on the Ripley side. So yeah, it's full on, and there's a lot of population growth in the area because it's close to the Amberley Defence Force area. So all the RAF people like to buy Ripley and South Ripley because of the proximity. So good tenants. That's the now I'm going to talk about the Brisbane scene, the current market scene for rental. In most properties that we rent out, we receive heaps of applications. But when we are going to approve a tenant, it is always quality over quantity. And there are so many levels of checks that we have to look at. It's not just, can this tenant afford to pay a rent? We have to see whether they have, a good reference from the property manager, employment, They're not listed on the tenancy database, very, very important. And many other checks. So we like to look at their social media accounts. I know it's a bit of stalking, but we want to basically happy tenants, happy owners. So you have to trust our processes and our experience. We've been doing property management for quite some time. And so we always ask our owners, please place your trust on our expertise and experience. Now, from January of this year, we've noticed that owners all rent at a higher price. Why? Because of course the growing interest rates. Tenants, however, are with not as much of an affordability. Nothing's changed for them. So it's not like their incomes increased. So houses are, previously we were noticing that you put a property out in the market and you would find that within like 48 hours it would be rented because people would all put in higher rental prices, mainly because of these interest rate movers. They'd be like, oh yeah, it's a 580, I'm going to put 620 so that my application gets approved. That was happening, but now it's not. So houses are taking longer to rent. However, we have strategies in place to ensure that we not only get the right tenant for the property, minimal vacancy, and at the rental price that is apt for the property, which will ensure that our owner is able to afford his rental units. So what are our strategies? Please come to a stop, we can have a chat. Jobs and maintenance for any property. I always let owners know, please have a budget for your property. For a brand new property, I understand there should be nothing. But say your house is a few years old, you will have a few issues that will pop up. Depends on the season. Aircon when it's summer, hot water system when it's winter. Always, a flag that you need to watch out for. And dishwasher is like, comes in every now and then. So always have a slight budget for your property, depending on the age of it, so that you're not hit with a big bill when issues happen. And for properties to rent quickly, we always say rent depends on presentation and marketing. So we cover both of them before we present a property to make sure that it's not just clean, it looks nice, the photographs are good, marketing as well, and of course the right price. Because you don't want to put your property out there and say, if it's, we present the owners with a comparative market appraisal before we put the property out for rent, and so that the owners know that this is what the property is going to achieve at, when it's out there on realestate.com. So it's not going to be something that's too much over the top, and it's not going to be below their expectation. We live and we breathe property management, so please trust the guidance that we have, and we offer it to you for a reason. So if you have any questions relating to your properties in Brisbane, in the surrounds, please do come and visit the store. We do have an offer going on, and that will be the next page. We are offering 3 months of free property management with zero marketing and zero leasing costs if you're signing up today. And if you're a PFA member, you're getting a 1% discount to your management rate after 3 months of your free management. So that's the Expo deal for today. Please do come and visit us at our store, and I will quickly hand over to Anand. And that's my contact details. If you want to get in touch with me. We are now going to have Brisbane Market Insights by Anand. Thank you.
Thank you, Lakshmy, for the Brisbane renter scenario. So I'm Anand from Guru Property. I'm the buyer's agent, buying investment properties for investors like you. So we are based in Brisbane, local to Brisbane for around 25 years. Being an investor myself for the last 20 out of those 25, and we have been a buyer's agent for the last 7-8 years. So I'm going to, there is a lot of content to cover today. So if I'm fast, note down your questions and we can talk to the stall, or you can always contact me later. Okay, quickly, I'm going to touch about where to buy, why to buy, and a few other things. Okay, so this is the agenda. Okay. So who are we? We talk about Brisbane market. We talk about why we invest in Brisbane. We also talk about what do we buy. Okay, we don't buy vegetables. Where to buy? Okay, part 1. And examples of properties that we bought in the last few weeks, months. obviously the reasons you use us as a buyer's agents. And then I've got part 2 of to buy later on. And then going to buy, and then questions. We may not have questions here, but again, please, you're welcome to come to my stall and we can answer them, or also contact me. Okay. Who are we? We are buyer's agents and award winners too. Okay. So we've been winning awards from 2021 onwards. We do our job properly. That is why we get awards. As buyer's agents, right? So we kind of buy 2 categories of properties, which is land banking, which is acreages and with potential of subdivision, or we will talk about that later. Then investment properties, which has got high capital growth, as well as rental, which have a budget of around 500K onwards. What do we do as part of buyer's agents? We recommend suburbs, a lot of off-market deals as well. Heaps of local contacts, as we've been there for a while, so we've got good local contacts, agents as well as sellers also. Property types, finalized buying criteria, negotiating, number crunching, estimates, due diligence, which comes like flood zone, bushfire, easement, telephone line, high voltage line. We do all those checks before even we sign a contract. We also are property managers. Lakshmy was here. Okay, so we don't buy properties that are not rentable or not livable or have issues. We only buy properties that are in a good capital growth zone as well as rental growth. Okay. Yes, we all want capital to grow, but we also want rental to grow. So it is in our vested benefit, because we're going to manage the property. So it is in our vested benefit that we buy properties where we've got long-term growth, so you can build your portfolio. So I can see a lot of cases here who have bought properties through me. I won't name or see anyone, but I know who they are, and they are already ready for the second or third property. Okay. And we've got a good property management team. So we've got a good buyer's agency team as well, and then we've got a good PM team as well, and we are in the top 3. Said top 5, but in the area we are top 3. Brisbane market insights. Okay, so what is the current market scene in Brisbane from a investment point of view? Strong economy. So we are competing with Sydney and Melbourne now. Brisbane is not like how it was 10 years ago, where we were dependent on other states and other countries for jobs and all that stuff. But we are not anymore dependent on mining and tourism. So we've got our own jobs, we've got our own construction, we've got retail, we've got good education, schools, universities. We are self-sufficient and self-sustainable. So what that means to you is, even if one of the occupation tanks, property price won't go down. Like 10 years ago, in Gold Coast, we had a big tourism tanking. Market went down really heavily. That's not going to happen anymore, because we're not dependent on tourism. As you all know, 2032 Olympics, a big game changer. It's a big event. It's a big ticket item. So we've got 9 years up to the event. So usually market goes up around that 5-6 years before the event, and then after the event 2 to 3 years. Okay, so that is what, I'm not taking this out of thin air. This is what happened in Sydney Olympics. Okay, so from 94, 95 onwards, that's when we started seeing the market to grow. And then if you see 2003 onwards, or 2004 actually, when market started dropping in Sydney. Market sentiments, historical increase in property prices because of major events which we've spoken about, Sydney Olympics 2000. Queensland now has got the highest interest rate migration. Okay. Obviously after the pandemic, we've got work from home options, so people who have got, need a good lifestyle. I'm not saying Sydney doesn't have a good lifestyle. I love Sydney. We came in yesterday. It is like mini India. So if you want to live in Australia and feel like India, Sydney is the place. Definitely. That's how I felt yesterday when we went to Parramatta. We went to a restaurant called Radhe. At 2:30 p.m. it was full of people eating food at 2:30. That's amazing. In Brisbane, nothing is open between 12 to 3 p.m. Everything is closed. So we are Queensland. We are very laid back. Aram se kaam karte hain.
What is the weather?
There is easy life. Aram se. Warmer climates, as I said, a lot of retirees also come. Okay, Sydney 2 million, 3 million, Melbourne 1.5 million, 2 million. They sell their property, come to Sunshine Coast, Gold Coast, Brisbane, spend 700,000. They still get a palace to buy in Brisbane, and then they retire. Okay, so we get a lot of those people, and professionals also who can still work from home from Sydney. They're still working for a company in Sydney, like. Port of Brisbane, these are all big infrastructure items that are in the pipeline to build or to upgrade. We've got Port of Brisbane, Brisbane Airport. So Brisbane Airport is the third most busiest after Sydney and Melbourne, not Adelaide or Perth. Thousands of, again, Gateway Motorway upgrade, Cross River rail that is opening in 2024-25. That is a big ticket item from a transport infrastructure perspective. That is also getting ready for the Olympics. Thousands of new job opportunities. We've already spoken about that. Demand is ever increasing. Steady market, strong fundamentals, and current market situation. Talk Anand, I have said. I just keep talking about property, so which I have spoken. Why in Brisbane? I've asked where else other than Brisbane. Affordability, we spoke about that. Self-sustainable, lot of demands. Rental crisis always. We are in a rental crisis now, and it is not going to get any better, at least for the next few years. Because of those reasons already mentioned. We've got Olympic precinct infrastructure in all the areas of Brisbane. It is not just Olympic Park like in Sydney. I don't know much about that, but in Brisbane we've got Moreton Bay, Springfield, Ipswich area, Logan area, Gold Coast, Sunshine Coast. Obviously the Brisbane City, Gaba area also. We've got the Olympic precinct infrastructure. We are talking about billions, more than $50 billion in the next few years. Apart from that, we've got the Logan City alone. We're getting 18 billion for the major upgrade, which is the Logan Coomera connector. Coomera is part of the Gold Coast. Logan is southwest of Brisbane. It's a 45 kilometers express highway. Gold Coast prices have gone up, not much affordable. People are coming to south of Brisbane so they can get the lifestyle of Gold Coast. So this piece of infrastructure is only going to increase more demand in those Brisbane South. Okay, 2023 budget, new schools, a lot of new schools coming, Ripley, South Ripley, Morayfield, those are some of those areas where new schools have been allocated. So that is one sign I always take when we see capital growth happening. If Queensland government is investing money there is a reason. What is the reason? Population explosion. When population goes up, demand, houses goes up. When demand goes up, price increases. Airport, we spoke about that. Again, we spoke about the interstate migration, affordability, and Queensland government as well as federal government has announced a lot of new schemes, new things where it is attracting a lot of people into Queensland. Okay, I was this morning, Sydney ABC News said government are paying $5,000 to Queensland nurses and doctors to come to Queensland and work. Okay, so this is an encouragement for people to come to Queensland. But housing supply, there is government are not doing much for the supply. So what is happening is it is putting more pressure on the market from a rental perspective and also from a demand. But people are finding it very hard to get properties. So this is one reason. So only 10% is government. So there are around 90,000 houses that Queensland government owns. That is social housing, we say. That is only 10% of the supply. 90% is private investors. All these people who are sitting here, that's you. So that's all your property. Okay. So what that means is, the rent price is going to go up. It's already gone up last 18 months. There is more opportunities to go. Okay, why in Brisbane? I think we have touched a few of those already. Interstate migration, employment. Okay, so people ask me, oh Anand, interest rates are so high. How come markets stay cold? How come prices are increasing? How come buyers are still there? Because even employment, everyone's got money now. No one's unemployed. Unemployment is lowest the last 20 years. So it's fallen to 6%, from 6% to 3.5%. It was 4% last year. Economic growth is faster in Queensland than any other state within Australia. Spending at all levels. As I said, people have got money. They're spending on construction, spending on retail, shopping, and all that. Okay. We've spoken about sustainability and consistency. What do we buy? We don't buy vegetables. But I'll tell you one thing. Yesterday I went to this Radhe thing. Vegetables here are very cheap. Indian vegetables. We saw bindi was $8 kilo in Radhe. In Queensland, in Brisbane, it's $23 kilo. Last time I ate bindi was when I was in India. Because who will buy $23 kilo bindi? And totally, you know, totally. Totally is also $5 or $6 kilo yesterday. Fresh, fresh was $5, $18 in Brisbane. Okay, so I thought, oh, property prices are high, but vegetable is very high. So cost of living looks like is low here in Sydney. Even the restaurant bill we got after we ate, there were 6 of us, was very low if I go to Brisbane. First of all, I don't go to Brisbane to Indian restaurants. Because yeah, so at least 2 of my clients were in Sydney. They came to Brisbane in Christmas time. Okay, Anand, okay, so then I was, family was in India, so I was there alone. Okay, I was there. So I came, they asked me, where? Anand, I want to go to Indian restaurant. So I was scratching my head because I didn't want to say I don't know, because they would say, oh, you are here for so many years, you don't know where there is Indian restaurant. So I didn't want to say because there is no good Indian restaurant. Very very less Indian population, but it is growing. Some of those areas, like Lakshmy mentioned, Spring Mountain, Springfield Lakes, Ripley, South Ripley, North Side, Mango Hills, North Lakes, good Indian population. But it doesn't mean anything to you as an investor. I'm just saying that those are the areas that a lot of Indian investors are investing. But we don't look at those kind of demographics. When we are investing, we look at infrastructure development. That is the main criteria we look at. Number 2 criteria is the size of the land also we look at. But sometimes some people come and tell me, Anand, I want a newer house. Then we have to compromise on the size of the land. We can't get new house, big land. Not possible. Okay? Older house, 15, 20 years old house plus bigger land, yes. Okay? In the 500,000, that is the budget. Okay, so that is what we buy. Established investment properties with capital growth, budget 500,000 onwards, bigger land, 600, 700 plus blocks, 15 plus years old house. Okay, newer houses 350 onwards, square meter block, less than 10 years old. Okay, so that is the criteria you have to think in your head. Land bank opportunities, we buy acreages or hectares. Okay, minimum budget I have put is 1 million. Okay. So what we do with those is like it's 10 acres, 20 acres. It is still not too far from Brisbane. It will be probably 40 kilometers from Brisbane city. Near to the other areas like Ipswich CBD or Logan CBD or Moreton Bay region. So that will be near 5-10 kilometers from there. So either those properties we will have a house where you can rent it for $700-800 per week, or we do agriculture. We will lease it to a farmer. Okay, so they will give you lease rent $700,000 per week. They will give you rent, and it will be 5-year lease. Okay? So for 5 years you don't have to worry about it. In the lease there will be conditions around 3%, 4% increase per year. But 5 years fixed lease, they will spend all those infrastructure from a 2% equipment perspective and do farming. So that is another. We do a lot of those. Projects also we do, which I will tell you in the example. Brand new houses also we do. This is that's what we buy. Established properties, land banking, projects, which I'll tell you, brand new houses. It is not your typical house and land packages, but we will make sure that it is kind of a brand new as well, and at a good deal in a good capital growth location. Okay, where to buy? So part 1. Where to buy? Some of those is Ipswich areas, which I think Lakshmy has mentioned some of them. Those are all, when Lakshmy spoke, these are all maximizing your rental yield. So in my case, it is not just maximizing rental yield, but also capital growth. So some of those Ipswich areas, we buy in Springfield Lakes, Ripley, Red Bank Plains, Belford Park, Collingwood Park, Eastern Heights, Bandemba. So those are some of those areas we've been buying. Again, bigger land, around that $500,000+. Okay. Why we are buying? Public hospital, AFL Stadium, major development in the Springfield region. We do a lot of due diligence from a flood zone perspective, and other due diligence also we do. Some of the suburbs have grown up, and like Springfield Lakes have gone up, so we are not buying in that area much for the last 5-6 months, but obviously there are new areas that we pop up as part of the research and recommend areas. We come up with new suburbs every now and then. Ipswich is considered in the highest population of whole of Queensland, so it is estimated another 55,000 people will be living in the next 25 years. Okay, there are Olympic suburbs that we are targeting now between now and 2025-26. Olympic suburbs, as I mentioned above, are all over Brisbane. It is not just one area. Okay, so Kaba development area, Brisbane River Rail, new stations, new stadium in Moreton Bay region. So Moreton Bay region is very big. Okay, so you can't just pinpoint 2-3 suburbs. It's a big area. Some areas have already gone up, so we are not investing in those areas. Direct and indirect jobs leading up to the event, as well as operational jobs. So once you've constructed a big infrastructure development, whether it is road or whatever stadium, it needs to be maintained. So there is operational jobs as well. So we are expecting $20 billion of just visitor expenditure from 2025 onwards. So this is on top of 50 plus billion that is going to be spent for Olympics. So that is the amount of money we are looking at. So, and these are today's money, right? Today's. So I'm sure it will only go up. Okay, Brisbane Cross River started at 1.2 billion 6 years ago. Now it is at 5.4 billion. So just giving an example that these are all budgeted as today's prices. Construction cost, everything is going up anyway. Okay, some examples. Okay, so we said we buy brand new houses also, not typical house and land packages. So this property we bought in Sunshine Coast in 2015, a 350 square meter block. It is a typical standard 422 investment type home. Okay, it's not no bells and whistles, no big stuff. Standard 422, purchase price 418, current value 850,000, starting rent 450, current rent 700 per week. This is an example where there is a balanced portfolio of rental growth as well as capital growth. Sunshine Coast, we invested there at that time because of the Sunshine Coast University Hospital. That is big, that was really big. So when that got announced, that's when we started buying properties in Sunshine Coast. And obviously the Aura development in Caloundra was another big ticket item. So we come up with these suburbs after those research, and this is one such example.
Where can I stand?
Okay, example of an established property. So this one was bought. So I have given examples. I've tried to giving examples where it is pre-COVID, post-COVID, and during COVID. So this is post-COVID. Okay, so 2015 was well before that COVID. Okay, and this is November 2021 was rising market. It was kind of peak. June 2021 is when the market started picking up. Okay, November 21 was kind of a peak. Went on until February 2022. Yes, and March, April onwards started to slowly die. So location, Brisbane Metro, block size 640 square meter block, almost 20 years old, 19 years old to be specific. It is a three bedroom, 1 bathroom, 1 car house, not a big one. Purchase price 464,000, current value 550, starting rent 400. Per week, current rent is 470 per week. Okay, I think this one current rented at 470. I think it probably gone up 480, 490 possibly. So this is an example of an older property. So a lot of people tell me, Anand, a lot of maintenance, I don't want to buy old property. But we are buying properties from an land appreciation perspective. So first property, you can always buy, maybe second, third property, you can buy a newer property, so there can be depreciation benefits as well. So there is a balance there. Okay, February 2024, peak market, okay, block size, again Brisbane, block size 1,000 plus, 30 years old, again 3 bedroom. So if you can see, like older properties are in Queensland are usually 3 bedroom, 1 bathroom. You don't get 422 unless it is less than 10 years old. Maybe 15 years old also you may, but not in the older capital growth zones. Okay, so these investments are more from a capital growth perspective and not from a rental growth perspective. Okay. Again, we are getting good rent anyway. So purchase price 455, current value 530,000, starting rent 410, current rent at 460. So rent, it will keep growing. 460 per week is very, very affordable. So if we put this kind of a property for rent, it will rent in 2 days. That is the kind of applications we get. So as I said, we are in a rental crisis. Okay, bought in April. Okay, April of this year. Okay, so I should mention that. So I have put question mark. So would you say it is a rising market or declining market? April this year. Yeah, it is slowly. Yeah, it is easy. Okay, so if you had asked me February, January 2023, it is slowly cold. But in March, April onwards, it started heating. Now it is definitely a rising market. Okay, block size 638, 11 years old. So this one is a fantastic deal. It was, we bought this property off market because I remember it's only a couple of months old. We bought, so I remember 422 purchase price 500,000, 520 current value, starting rent 520, and it was what rented for. So the fantastic deal, you'll probably get depreciation for these kind of properties also. Okay, land bank. Okay, this one 4.5 acres, Brisbane Metro, good condition house already exists in these kind of houses, 4.5 acres. It is not subdividable. If you are thinking, oh, 4.5 acres now I will subdivide, no, you can't. Okay, maybe after 5 years, yes, you can. But as of now, it is not in a in those kind of zone. Okay, so strategy is rent and hold. Okay, land bank. Okay. Purchase price 895, current value 1.2 million. So this buyer has already bought 2 properties using the equity from these kind of strategies. So, and you can see rent is also good. It is not those 400, 500 types per week rent. It is an 850 per week rent, 840 to be specific. So Queenslanders love these kind of acreages. What they do is they I don't know what they have. They've got a lot of things to store. So they like sheds. They like sheds more than houses. So any property that I buy with a shed has got $20,000 more. Because it's a shed. There is a shed. Oh, bathroom, there is only one. Oh, it's okay, but there is a shed. No? So that is the mindset. Okay, so it is a fact. I'm not making fun or anything. That is the fact. Okay, shed adds value. Straight away at $30-40 per week, more also you will get rent if you got a big shed. Okay, so another land bank. This is a subdividable one. So we bought this thing around that May, June last year. 4,000 square meter block. It had a one old house. Then we subdivided it. During the subdivision process, it was renting at 400 per week. So you can see the holding cost. See, the purchase price is 1.1 million. So you are only getting 400. So holding cost is high. Why? Because purchase price is high because it's subdivided, ready to subdivide now. So obviously the purchase price will be high. Okay. So current status is we've subdivided the land and existing there is a home in that and it is valued at 600,000. The others are all sold at 350,000 each. So in negotiating is this one, 22nd May, we started negotiations on this property. It's 5 acres, 1.9 million. It is in the priority development area. So that also changes the equation a bit. Okay, priority development area means there is 90% chance that it can be subdivided if you put an application to the council. Okay, so the previous 4.5 acres is not in the priority development area. There is just an expectation that it will be. So that is the difference. So I've got only 7 more minutes. I spoke about projects, so these are the projects, these are exclusive to us. So the way the projects work is, it is a joint venture agreement between you and us. So there is no buyer's agency fee. There is a buyer's agency for initial purchase, yes. But we buy those land, we do the project, and we will sell it. And the profit is shared. So that is kind of a project that we do. We don't do too much now, but we try to do 1 or 2 every year because of lack of time. But Again, the project 2 is available. This is 11 kilometers from city. This is short term, again, but high risk. Okay, why us? Obviously, we do a lot of off-market properties. Sometimes off-market properties may not be a good deal, but obviously we've got the experience. We know which properties are worth, how much you have to pay, what is the value, what is its worth. So pay under market price. A lot of properties we buy, like as soon as we enter into a property, we know what it is worth. We inspect around 30 to 40 properties per week. Just not me and my team. So we don't buy properties online. Okay, so although my hair is black, I'm not that young. So a bit old school. So I like to go and inspect properties and buy it. So that is the value you get when I'm buying. So I don't buy in any other areas. I just focus on Brisbane, Gold Coast and Sunshine Coast. Okay. A lot of agent contacts, information. We save anywhere between $20,000 to $50,000. A lot of properties don't even come online, the good ones. Okay. A lot of dual occupancy properties, high rental yield properties, we buy off market. Local knowledge, detailed due diligence, we spoke about all that. And we spend a lot of money on information, research, tools, subscription. A lot of time and effort goes into those research. Like previously, 5 years ago, we were doing our hotspot suburbs every year, but now in a dynamic environment, we do every 3 months. So we spend all our effort on coming up with these areas. Like today's $500,000 property is yesterday's 500 is not today's 500. Okay, so we need to keep changing. We need to come up with new areas, and that is what you pay us for. Okay. How do we add value? Obviously, we spoke about saving money, time, and local knowledge. Right? We are experienced buyers. As I said, we buy one or two properties per week. Okay, just in Brisbane, not all over Australia. So we are focused on that region. We know the place. We know the market. As I said, we inspect up to 40 properties per week, physically. Okay, not online. Okay, physically. I repeat, physically. Just on Saturday open homes, it's 20-25 properties. It's a big list. People who are my clients will know how I do. Study, council, we come up with these areas. How do we come up with it? We don't put the suburbs out of thin air, Spend a lot of money. Local council, government plans, budgets, where there is infrastructure development, where there are plans, we invest. Other important aspects, get good negotiators. A lot of agent contacts definitely helps in buying. Okay? Because we are local, we know 80-90% of the agents know us and vice versa. Okay? So before the property goes online, they call me Anand, have you got a brief? Okay, and they know, they can't say a 500,000 property, Anand, there is 600,000. They will know that Anand knows we have 500,000 property. So we can deal with those pushy agents. From my perspective, we provide you, show you unlimited number of properties until a successful purchase. Okay. You are all in Sydney, I am in Brisbane. So we are your eyes, legs, ears. So every video that we provide you after inspection is with a commentary. So it will tell you what the property is. Because in a video you may not know how the carpet is, whether it's ugly or dirty or brand new. So we tell you all that in the video as well. Okay, and obviously the education process throughout the buying process. Okay, where do we buy? Part 2. So we covered part 1, part 2. So we're buying a lot of properties in Moreton Bay region. That's where the new stadium is going to come as well. It's not planned, but that's the expectation. Major university, University of Sunshine Coast is in P3. Phase 2 is going to come very soon. Phase 1 already opened. $10 billion of Caboolture development happening. The government announced 5 new suburbs in Caboolture on the 26th of April. Okay, I can't remember what those 4 names are, 5 names are, but Caboolture is going to be a major hub very soon. We already got multiple train lines. The Kiparing Rothwell line opened in 2017 or 18. That's when the one growth already happened there. There are a lot of areas that are crime and low socioeconomic. I hate to say this, but just have to watch out for that. A lot of Caboolture areas also got flooded in 2011 and also last year in 2022. Again, due diligence needs to be carried out in some of those areas. Buying tips, we try to buy bigger blocks of minimum of 600 square meter block. Again, due diligence of all those properties we do. Buying when not many are buying, right? Quality locations, underpinning strong fundamentals. If the fundamentals are strong, there may be market may go down just because of sentiments, but long term there is growth. So property, if you buy today, tomorrow you may not get money. It is a long term. So you keep accumulating properties. Idea is to buy a property at least every 12 months. Okay. So I've said now is the time to buy. Okay. Why did he say that? Why did I say that? Because of this. Okay, so I don't know whether you've seen this graph. I didn't make it. The person there, Samuel Bennett, he made it. Okay, so and I took this from Google. So some of the circles is what I did. All I did was I did these red circles and those things. Okay. So what I'm going to use this, right? So 1999, 2000, that is when I came to Australia. Okay? So this is the Olympics, Sydney Olympics. So that's after the Sydney Olympics is where we had that downturn I mentioned. So 2003, 2004, that is when I first purchased my first property. That's when I thought, oh, market is going up. Oh, I had to buy a property. I came in 99, so it's already 4 years. I bought my first property, then market went down. Oh, so I've lost my money. I didn't say that, I didn't think that way, but in 2006 to 2007, we bought a lot of properties. Me and my friend, didn't have kids then, but we did, me and my friend, and Lakshmy was earning too. I had a job. We bought a few properties together, but I sold. I shouldn't have. I regret my decision. After 2-3 years, I sold those property because I thought I had made my money, and I regret that. Okay, so if I had accumulated those properties not sold, then I wouldn't be standing here. Okay? I would be probably in a Gold Coast or Sunshine Coast Beach. Yeah, I wouldn't be working. 2019, this is the pre-pandemic. You know all these things anyway. I don't need to tell you. This circle, this one is the GFC, the 2008 GFC market plummet. So why I'm saying this is we don't know these things. At least I don't know what happened this. At least I know this. Okay, so this is all true. Okay. So if you think that this is all true, then this must also be true. Okay. So 2023 is now. So that is how I think we should be buying. Okay. I am 3 minutes over. 3 minutes over. Any questions? I think the next presenter, I'm not sure who that is. Maybe waiting. But any questions? Happy to answer in the store, or you can also contact me. Thank you all. Thank you, Sydney.
Thank you.